Raymond James Financial. I wanted to put together an analysis on RJF stock, answering the question, is RJF stock a good value investment? Now, we're seeing a slight transition in the economy. My take, first and foremost, on the economy is that we will see a declining rate of growth, which means the stock market's slightly overpriced. We're going to see stocks move lower. As I write this, as I'm putting this video together, I did see a spike higher in RJF stock on some news of inflation, that the Federal Reserve is very likely to not have to raise interest rates. The Fed chairman did mention something that he doesn't see. Just today, he mentioned something that he does not see the next move being higher in interest rates. They will maintain interest rates at this level for some period of time. In the future, they will lower interest rates. So for RJF stock, and any analysis dealing with the price projection for RJF stock, what does that mean? Is it a value investment? As it turns out right now, given where we are or where the future earnings per share for RJF stock is, it is underpriced. But my expectation is that economic growth is going to contract somewhat. So we could see RJF stock moving lower, which would mean, as a value investor, if you're looking to pick up RJF stock, you would be able to do so at a much better price. Let me break down price projections for RJF stock, breaking down RJF stock as a value investment, and I'll show you some of the charts I have. Let's jump in. Here's a look at the 4-hour bar chart on RJF stock. Since the latest release, RJF stock did fall, has kind of regained where it was previous to the financial earnings release, and is moving higher. Now, one of the concerns that I have for RJF stock is simply this, that a lot of their profits are driven because the stock market itself is really robust and will continue to be so, at least in the eyes of a lot of investors. I start all my analysis as an economist, and I look at the economy first, and then that the stock market is a response to economic growth. The economy will be contracting and the rate of growth is going to decline. Number one. Number two, the reason why is because the Federal Reserve will leave interest rates higher for longer. We're very likely to see unemployment moving upward somewhat because expenditures are going to decline. They're going to decline on a lower and lower year-over-year progressive rate. So that's how I start my analysis. So when I look at RJF stock, I see it and I say, you know what, it's overpriced right now based on the future economy, not necessarily the future of what Raymond James Financial could do in any particular economic environment. This is the weekly chart on RJF stock, and as you can see, it's moved up significantly, especially since March 2020, when it was trading at sub $40, where RJF stock is now at $125. It did pop up higher on today's news. I don't have that chart updated, but it's pushed up into, say, 127 level for RJF stock. But let's break down a quick and dirty on RJF financials. 81 billion in assets, 70 in liabilities, given a total equity of 10.9 billion. Shares outstanding, 207 million. Current price, 126 when I did this analysis. Again, it has popped up. Market capitalization of 26.139 billion. Then we have the market capitalization less cash plus liabilities gives you 82.4 billion enterprise value. Financials. Revenue, we saw 3.61 billion for Q2. 3.61 billion is 12.4% or 12.5% increase year over year from the previous quarter. So that's a solid increase. It does outperform the broader stock market. Earnings per share, 222 versus 193. Again, this is a 15% increase. So on the one hand, we saw a sizable increase year over year for the quarter for Raymond James Financial, but an outpaced increase on earnings per share. Maintaining that would be sort of the challenge. And again, I believe that the economic conditions for the United States is going to move at a slower pace. The stock market will fall. That's where a lot of Raymond James Financials does generate its revenue is because the stock market is moving as it is. You take that away, all of a sudden you take away the opportunity of Raymond James to continue to increase revenue gains and earnings per share. And that's where I differ from a lot of analysts, that I don't believe that the economy is going to just continue to smooth sail forward. Housing is a big sticky issue for the economy and for inflation. The Federal Reserve will have to leave interest rates higher for longer. That will affect the total economy, which in turn will affect the stock market and then Raymond James Financials. Price to earnings ratios. If you are going to pull the trigger on something, you want to try and get it at its lowest point possible. Q2 2023, it was trading at 12.3 times a multiple versus 15.5 times for this quarter. This is the highest, so it's really at its peak. Not the best time to ever pull the trigger. Financial projected revenues, 2024 12.8 billion and 2025 13.7 billion. I will go on record as saying they miss because the economy. Given the current at 12.8 billion, the previous at 11, this is a 16.36% increase in the next year over year. Net margins 13.2%, pretty much flat on Q2. I think it came in actually down 1.5%. Earnings per share projections, and this is where you really want to kind of break things down and ask the question, is Raymond James Financial a good value investment? RJF Stock, is it a value investment opportunity? So 2024, the whole year, 947. Their calendar year and fiscal year are a little different. I took a different number the next 4 quarters. 2025, 1011. Earnings per share, again, they miss revenue. They will miss earnings per share. The economy is not going to continue at its current rate of growth. Because of that, the stock market will fall down. RJF 2024, I took the next 4 quarters, analyst expectations, asking 2 questions. Number one, the benchmark rate, 4.50% for the U.S. 10-year Treasury. That is falling. Personally, stocks to buy now. I have many videos out on this. I am putting a lot of my excess capital into TLT stock, which is the price for ETF for bond rates. As Treasury yields move lower, price on bonds moves higher. I've been buying large chunks of TLT with my excess capital, and that trade is working out, especially after this morning with our inflation data release that we saw. There is a declining rate. It was quite elevated. 4.5% is your benchmark. Your worst case scenario with the U.S. 10-year Treasury is you lock in 4.5%. Now, eventually, the Federal Reserve will be forced to lower interest rates, which means that 4.5% would be very rich if the Federal Reserve pushed the 10-year. They don't actually push the 10-year, but if they pushed interest rates and the reaction to the 10-year was to bring it down to, say, 3.75%, price on those bonds goes way up as yield drops. So your downside risk to the benchmark trade investment grade is very low. RJF price, of course, given the yield on the earnings per share at 972, you're looking at 7.65%. which significantly outpaces the U.S. 10-year Treasury yield. And I showed you a chart on the long term over the past, 4 years for RJF stock. It's clearly a value investment in the sense that they continue to increase revenues. They are looked at as they will continue to do so. The margins are fairly solid, slightly above the S&P 500. Generally speaking, it outperforms the broader market. Just this huge asterisk to me. The economy is not going to continue to move higher as it is. Given that, RJF will probably see a nice price drop in RJF stock, which would make RJF stock a solid value investment over a longer period of time. They can clearly perform well in an expanding economy. But we're not going to see an expanding economy, which means the stock market moves lower, which means the revenues that RJF or Raymond James brings in declines. Same with earnings per share. When it comes to value investments, I'm pausing, looking for these kinds of stocks, but I'm still analyzing them on a daily basis. At the same time, I'm putting all my money into, all my excess capital into bonds. Price will go up as yields move down. I've done a written analysis on this. Make sure to hit the link at the end card here for my Substack. There is a link down below in the description. At the same time, if you're just finding my channel here on YouTube for the very first time, make sure to hit the like and follow button. Thanks so much for the great comments. We'll see you in the next video.